So right in this video, I'm going to show you how I read the market structure, alright, how I break down the chart, basically top-down analysis. For my 5 years of trading, I've discovered that our success in this industry depend mostly on how we read the market structure. Now, for the case of this video, I'm going to be using Euro GBP. I start far back as the 3 months time frame. Now, the first thing I do when I come to the chart 3 months time frame is to see if this market is tradable. What do I mean by that? Is this market a trending market or is it a ranging market? So as we can see, the market is trending. We have the market giving us a higher high, higher low, higher high, higher low, higher high, higher, probably higher low, and probably we are expecting a higher high. The second thing I do is to break down the chart to understand what has been going on. With that, I can predict what may likely happen. We had a break of structure to the upside right here. Now, the first question I ask myself after a break of structure is there an internal inducement or are we to expect an external inducement? I have explained this in my previous video, but for the case of this video, let's quickly explain that. So when I have a break of structure this way, if there is no internal inducement, I will expect an extension. So I will be expecting the market maybe gives rest on this resistance and give us a break of structure again. But for the case for my trading style, I regard this as an extension, whereby this becomes the inducement. All right, it becomes the inducement. Market reacts a bit, take it out, then reacts to the external order flow or order block, then gives us a break of structure. So this is the first one. All right, so the second one, when I mean internal inducement, this is what it looks like. So we have a break of structure. All right, so the market reacting from this order flow, instead of giving us a break of structure instant, it reacts from the external, the other alternate order flow, right? So this is what I call supply to demand flip liquidity. So it reacts from this supply zone, gives us a little reaction, takes out the high. Now coming back, this becomes our inducement internally. So you see the market gives us a little reaction, takes it out, reacts from the external or the last order flow, right, for that trade cycle. Then we expect a break of structure. So these are the two among many I look out for a trade cycle. Now looking at this chart, after a break of structure, obviously, like I said, we'll identify is there an internal inducement. So for the record, we have the market, so we have the market reacting off from this supply zone, which makes these points an inducement. And this zone becomes a potential point of interest. Also, this one becomes a potential point of interest, which is the last point of interest for this trade cycle. Now, if I was in this zone as of this time when it happened, I'll be expecting for this market to, come all the way here, then we buy. But that didn't happen. The market went ahead to give us an extension. Now, why do I call that an extension? I call that an extension because the market has not swept the previous liquidity, which is the inducement. So this becomes an extension for me. So meaning the low of our extension becomes the inducement. All right, which makes this zone a potential point of interest, because after our inducement we can trace the imbalance closest to it, and this is the order block that caused that imbalance. So basically for this trade cycle we have 3 points of interest to look at, but I'm going to filter this point of interest using my Fibonacci retracement. So I want to see what level they are currently reacting to, or they are currently sitting at. Now for the first point of interest, we see that it's not reacting at any level. It's not close to our 0.5 Fibonacci level or below our 0.5 Fibonacci level, so which makes this point of interest invalid. So the two I will be looking at as this and also this. Why? Because you see this market is sitting at 0.618, which is a great possibility that the market can come to this zone and buy off, which you can see that the market gives us a little reaction of. And also the second point of interest is our last point of interest, obviously, which is the strongest for this trade cycle, which is sitting at 0.786 Fibonacci retracement. So I'll go ahead to delete the Fibonacci retracement to make it neat. So I'm going to delete this and I will call it a liquidity. All right, so I would have been expecting the market to come in here and buy off, or we come all the way down here and buy off. So you can see the market reacted off this zone, but that zone did not hold. So obviously the next one for this trade cycle will be the extreme level, which you see that the market reacted from. And like I used my Fibonacci retracement to gauge it, it's sitting at the 0.786 Fibonacci level. So after that mitigation, the market went ahead to give me a break of structure. So after this break of structure, this inducement turns to liquidity because it has been swept. So the next after this break of structure is to repeat the same process. Did the market give us an internal inducement, or are we to expect an external inducement, which is an extension? So obviously right here the market did not give us an internal inducement but an internal order flow, right? Order flow. So this is the order flow, which makes the low becomes our inducement, and the order block beneath that inducement is now our point of interest, which is the extreme level. So I'll go ahead to delete that zone to make it neat. So let's verify our zone using our Fibonacci retracement tool. So we can see that our zone is sitting at 0.78 level of our Fibonacci retracement tool. Now this also clarifies that this is not a potential point of interest, neither this is a point of reversal, because it's neither sitting on 0.5 or 0.618. So I am hoping the market, or my prediction is for the market to retrace all the way here into our order block, then buy off, which makes our target for 3 months time frame this level. So we are currently looking to sell this market to this point, then buy from here. All right. So when I head down to 1 hour time frame, sorry, monthly time frame, I'm looking to digest this zone to see what is going on here. So let's jump down to monthly time frame. So monthly time frame, like I said, we are looking to sell the market, right? We are looking to sell the market bearish. So I'm looking at lower low, lower high. So this is the first break of structure to the downside. We also have a break of structure to the downside still. So currently I see that the market is reacting off this supply zone, which means it's a supply to a demand to supply flip liquidity. Like I said, when I have a break of structure, so for this case we are going to be using a downtrend, right? So if there is no internal liquidity, we expect an external inducement. So the market reacts a bit, take it out, comes to the order flow, then sell off. If this didn't happen, if there happens to be internal inducement, which will look like this, after a break of structure reacting from the alternate demand zone, right, we expect a reaction, take it out, coming back, this becomes the inducement, all right, it gives us a little reaction, comes to the order flow, then sell off. Now you can see that I'll delete the first one. What's going on here is still, it's exactly what's going on here. All right, so the market is reacting from this demand zone, so we're expecting a demand to supply flip liquidity. So what I'm expecting is, since we have this break of structure, the market reacting off this zone, I'm expecting something like this. Then we sell off, coming back to take out this inducement, we keep selling to the downside. So for monthly time frame, this is our target. All right. So when I jump down to weekly time frame, I'm looking to read this structure, right? Because we are looking to sell, but I'm looking to read this structure. And also from experience, I've come to discover that when we have an internal inducement this way, let's say we have a break of structure, the market reacting from the supply zone right here. Now when we have an internal inducement, for the record, from experience, the market usually comes to either 0.618 or 0.786 before pulling down. So coming down, coming back, it will now react from the order flow before selling. Alright, so now we are going to judge this using our Fibonacci retracement tool. From swing high to swing low. Now we see that the market has not yet tapped into, is not yet at 50 Fibonacci. Talk more of coming to 61 or even 0.78. So we are still looking more buying pressure. Even if this is our target for the monthly time frame, we are looking to buy the market some more, at least to the 50 Fibonacci retracement. So taking out, coming to this 50, 0.5 Fibonacci retracement becomes our target for a weekly time frame. So like I said, when we jump down to weekly time frame, we are looking to read this market structure. So when I jump to weekly time frame, our target becomes to take out this high. There's nothing much going on weekly time frame. All right, nothing much going on in weekly time frame. So when I jump to daily time frame, I want to read this structure on an uptrend. So jump down to daily time frame. All right, so on daily time frame, is there anything we can see? Yeah, there is something. I can see that the market gave us a break of structure to the upside. So for this case, we call it an IBOS. There is no internal inducement, so I'm going to call this an extension. When I jump down to weekly time frame, sorry, 4-hour time frame, it's going to be very clear. So we have this as an extension, and we have this as, okay, we have this as inducement. Then we have this as the order block or order flow. So let's jump down to 4-hour time frame to see things more clearly. So right here in 4-hour time frame, like we stated, we had this as an IBOS, an extension, an inducement. Now after the inducement, we can locate the imbalance, and this is the order block that caused it. So we are using this order block, right? And for this trade cycle, we have this zone to be the last point of interest where the market is not supposed to cross. Once it crosses that level, it's considered a change of character. So we see the market reacted from this zone, cleared out the inducement, tap into the order block or order flow, take off. But we notice that the market was unable to take out this high, right? Came back down. So we are still sticking with our buy bias. So this is a top liquidity right thing here for the market to take it out, right? So we found out that the market came back to the order block, but didn't create a change of character. This is just to point out that the market is very precise in whatever it's doing. Okay, so you see the market came back to the order flow but didn't cause a change of character, tapped into this point and start pulling up. So we are looking to buy till we take out this level, right here. After this mitigation, this was the last high chalk we had. So after the high chalk, we ask ourselves, is there an internal inducement or an extension? Are we to expect an extension? So right here, we had this as an inducement. Then our order block comes below the zone. So I'm going to delete this guy. So we are going to jump to 1 hour time frame because this is where mostly I take my trade. So this is where I would have been, sorry, 2 hours time frame first. So this is where I would have been looking to take a trade. The market then went ahead to give us an extension, meaning our inducement shifts all the way to this point. Then this becomes a potential point of interest for us. This is the trade setup right here, but I deleted it, so I didn't participate on the trade. But that is it. So this is the point of interest, okay, and this becomes the last, because you see that this inducement mitigated this order flow, so we are just looking at this order flow as our last point of interest, right? Now we are going to verify this using our Fibonacci retracement to know where it's sitting. So currently you see the market is sitting at 0.78, so this is the trade circle. If we go to 15 minutes, you are going to see what's happened in this week right here, this week. So let's jump to 15 minutes and know what's really good happened in that week rejection. So here on 15-minute time frame, this is the order block right here. This is the order block. So if you don't want to mark it as an order flow, I can go ahead to mark it as an order block. So order block means refined order flow, right? So I'll go back to 2 hour time frame. Now you can see the point of interest right here. So go ahead to read it. You can see the market just came into the zone and bought off. But if I had to take this trade, I would have refined it to be an order flow. Alright, so it will be another flow right below, beneath my zone. So all this zone becomes my AOI, area of interest. So I'll delete this Fibonacci retracement. My target is to buy here. My stop loss goes all the way here. And my first take profit is this zone. My second take profit, it's since we are looking to take out that extreme high, so we still have more room to the upside. So this becomes my second take profit. Alright, so buy all the way to this point. So yeah, that's the first trade. Like I said, I didn't take this trade, I deleted the setup. So that has played out already. So delete, we continue. So we had a break of structure, IBOS to the upside. We had so after this IBOS, there is no point of interest inwardly, there is no inducement, so we're expecting an extension. So we had the extension right here, which makes the low of our extension and inducement. Then this low is taken out. I'm going to delete this. So this becomes the low, the last point the market is not to take out for this trade circle. So beneath this zone, I can't really find an order block. So this is, let's go to 1 hour time frame to check where. So right here on 1 hour time frame, the order block I can see, the imbalance I can see is this one. So this is the order block that caused that imbalance. So that the whole area becomes my AOI, area of interest. So I'm going to go back to 4 hour time frame. Okay, let's go to 2 hours time frame. So these zones entirely becomes our order block, our AOI, area of interest. So we have this. Then this becomes our target for this trade. This is a 1 to 7. So let's just give it room a bit. Just a little room. Yeah, this is okay. So this is a good risk to reward, so I'll not be looking to extend this some more since we're already above close to our target, because when it gets to that supply zone, anything can happen. So this is the trade cycle, what I'll be expecting of the market. You can see the market came here, and now let's judge our entry, our targets, our entry zone with a Fibonacci 2. Now you can see that this is not a potential point of interest. It's neither sitting on zero point 0.6 or 0.7, so it's an inducement, a liquidity for the market to take out. So we're waiting for the market to take out the zone, tap into the other block and buy. All right. So yeah, that is my prediction for this market. So yeah, if you like the video, then do well to like it, subscribe, comment, and also you can follow me on social media platform. On Instagram it's MimiFX, on LinkedIn it's MimiFX, Miracle Anayo MimiFX, same name you have here on YouTube. On Telegram I have a free channel where I drop signals for free, right? So you can request for the link. I'm going to reply and send you the link. And also, if you are interested in mentorship, I have a step-by-step approach. I will hold you by the hand and teach you from fundamental analysis to taking trade and refining your entries and everything you need to know psychologically on how to trade profitably, right? I have struggled in forex trading, so I'm going to tell you what really works. So if you're interested in mentorship, my number is going to be in the description of this video, so you can reach out to me on WhatsApp, or you can reach out to me on Instagram, on Telegram, whatever platform you choose, and we go from there. So yeah, that is it about this video. Thank you for watching, and see you on the next one. Evergreen.